So what we are doing is pretty simple in this scenario. We are marking the uh, ATH in here. So that was our ATH before the breakout, and that was this is our current standing ATH. Uh, So that's where the breakout happens, and that was the first FVG created in the breakout process. So this is the breakout candle, this is the middle candle, this is the lower candle, this is candle A, B, C, the gap between the A and C, and is the FVG, and similar here as well. So breakout, breakdown, we have two levels. We're watching price action. We are looking for the price to test either. This is long term. We wait for the right moment, and we execute based on the confirmation. So that's our entry here, and that's our entry here. So ideally, the trades that we will have been preparing is kind of the sell below the middle candle, so below this, and targeting whatever based on the price action. And on the opposite side, what we'll be targeting is entry around here, and same SL above the middle candle, and uh, targeting whatever based on the situation. So that's the whole scenario for this. Now let the price action play out. We are going to likely get the upside test first in most cases, because that's the breakdown happened. But in this case, we are getting closer to the downside first. But eventually we get the downside confirmation, and that's our, in this case, let's go back. Yeah. So generally what we do mistake do in this case, when something is piercing through that, we generally erase the FVG. So we say that this was taken out. So this was never taken out. In this case, it didn't confirm that. We stay, we don't execute, we wait for the price to do the same again, and it does in eventuality. So that's this is the scenario where this is conforming. It is taking in the liquidity and going lower. So in this case, even if we execute, let's say, a short position here at the close, our SL is just above that, and we are targeting at least this as a TP1, sorry, this as a TP1, and as a TP2 we are targeting this. So that's the trade we have. In this case, this is really long term, and it can go on for quite a while as well, because it's 4 hour. So in some cases also have really large SL, so we'll have to allocate position size according to that as well. So, but it's a really good confirmation trade, and we are it's a very systematic way to trade as well. So in this case, we are doing that. Also, in this process, what we have is a major level being created here. First FVG being created in this level. And the price actually reversed here. So that's our point of reversal in this case, and this is something that we will consider as a TP1, as I mentioned, we discussed, and TP2 below as well. But we'll be looking for confirmations here, and when we get it, we will obviously exit the first trade, and then so we are breaking through, so that's good. We can stay in our trade, the first one, and target the lower one. So that's what we are getting. So in this case, our target is being filled. This trade that was created here is closed. Now we have a confirmation here. We are creating a new FVG as well at the previous all-time high, which is really great for us. And we can in this case, create a new trade based on that. Uh, the new FBG is created, we can take a trade when it tests. In this case, it does in the next few days, and that's our SL. That's our the trade is going to be here. So whenever we execute, our target can be much. This can be our target, but in this case, this is a stop loss. This is our first TP. We can confirm. Sorry, decrease our B SL to B and then run the trade, which we can do, and then it goes further. It's very simple execution procedure, and we just wait for the price to give us new AVGs at reversals and new confirmations, and we really trade much longer term. So for example, this trade goes on for, I think, 7 days, 30 bars. The next one goes on for, let's say, even if we exit here, it is going on for another 9 days or so. And that's how the thing can work. I think the idea is very simple. It's not complicated. It's not handling too much information. We are not looking at many things at all. It's a lot less indicators, absolutely no indicators at all. In this chart, we may look at volume in certain cases, but I don't think that's necessary because we are essentially looking at volume. If we just print the volume, we'll see that confirms our logic as well. So if we go back here, here we'll see where the volume lies. The volume is at the lower levels, so that's why the momentum is happening. So this upper area doesn't have the volume, so that's why we're looking for the confirmation here, and price to go lower, take the liquidity, move higher. So that's what is actually happening. It's backing our logic. Even if we are not looking at the volume, we are already looking at the volume because we are looking at the price action. So that's the idea. And yeah, I think it's a very simple way to look at the market without having any complications and without having much worry about how things are going to go, what is going to happen intraday, and how are we going to handle certain news or anything that is, yeah, like that.